Oh boy. What was it, a year and a half ago? I was kind of describing what I was going through with my business and kind of what I was experiencing with the passing of healthcare reform. And a lot of insurance companies went out of business. Now there's just a few left, and they're the big ones. There's a couple of regionals like Medical Mutual, but as a general rule, the change has taken place. Sorry. Okay. So what I thought I'd do is talk a little bit about what is happening now. We're talking to dozens and dozens of small employers throughout Ohio. Actually, I was in Indiana yesterday meeting with an employer. To kind of give you an idea as to what healthcare reform is doing, how it's affecting the employers, what decisions they're making, and how it's going to affect each individual as healthcare reform rolls in.
You need to switch that?
Yeah, go ahead. Okay, what's it called? My partner is president of Ohio Health Underwriters, and he spends a lot of time talking to people in D.C. and all that. And he says you can figure out who a Democrat is and who a Republican is. The Republicans call it Obamacare. The Democrats call it Cheap Hacker. So that's a surefire way of figuring out if you're talking to a Democrat or Republican. Healthcare reform, basically what it really is the Patient Protection and Affordable Care Act. And that's really what it's called. Next slide. Okay. The Kaiser Foundation has a 13-page summary. And I'm not going to get into all the ins and outs of healthcare reform, what's involved. I heard somebody describe healthcare reform as being like a 17,000-piece puzzle. And you can pick up different pieces and say, oh, this is terrible, oh, this is pretty good. There's a lot to it, and it's a lot to digest. And I really wanted to focus on just what the decisions are facing, what decisions employers are facing, really what I see that's going to happen over the next 12 months. But on the first part of this Kaiser Foundation summary, there are a couple of things that I did want to mention here. First of all, the overall approach to expanding healthcare access to coverage. It's required that all U.S. citizens are required to now buy health insurance. I mean, that's basically what it's all about. And it's supposed to be a situation where they're creating a state-based American health benefit exchanges. Now, there's going to be a federal challenge in the Supreme Court probably as to whether or not the federal government can mandate that states have to create these exchanges, and that's another topic for another day. Next slide. There's going to be this individual mandate. The individual mandate is going to say that if you don't buy health insurance, you're going to have to pay a penalty. The penalty for the first year is $95 if you don't buy it. The second year is $325, and thereafter it's $695. Next slide. We're going to fly through this kind of fast this way. Employer requirements. Basically, employers are required to provide health insurance for their employees. Otherwise, they pay a penalty, and that's for employers that have 50 or more full-time employees. Employers that have less than 50 full-time employees are not required to provide health insurance for their employees, and there's no penalty. A lot of people, in fact, yesterday I was meeting with an employer that's a software firm. He has 15 employees. First thing he said to me, he says, my God, I have to provide health insurance for my employees. The rates are going up. Otherwise, I have to pay a penalty. I said, no. It's only if you have 50 or more employees. Next slide. Okay, here's the changes. On the individual basis, the big thing that's going to happen is from now on, starting January 1st, 2014, any individual can buy the same essential benefits, same type of coverage as what they can get through their employer. Up until January 1st, 2014, the end of next year, it's always been a situation where the only way you can get good health insurance benefits would be to get it through your employer. That's a big change. It doesn't matter if your insurance is through your employer with a fully insured plan, or if you get it as an individual, the benefits will be essentially the same that are offered. There's not going to be any pre-existing conditions. There's no medical underwriting. There's going to be government subsidies. The mandated benefits will be better, as far as benefits are concerned, than what most employees have with their health insurance through their employers. Everybody's saying, well, gee, with healthcare reform, our benefits are going to be terrible. Well, the way the benefits are being designed, it's going to have all the goodies, all the extras. You know, people can get abortions now and have it covered under the health care, where a lot of times it hasn't been. It's going to have everything. But the cost is going to go up. It's going to skyrocket. The big decision that everybody's going to be making by the end of next year concerning their health insurance is their doctor's network. The plan that you choose will probably depend on whether or not that plan offers your doctor that you want to go to in the hospital that you want to go to. Next slide. Okay. There's going to be two things I'll have available for anybody that wants it. I'm going to have this 13-page PDF file that I can send that shows the 13 pages of everything that's involved in healthcare reform. The other thing is there's a calculator where you can put in how much you make and how much of a subsidy you qualify for. You can qualify for a subsidy in getting an individual health insurance plan if you're at 400% of poverty or less. So as an example, if an individual wants to get a health insurance policy and is not qualified to be on an employer plan, so the employer decides, okay, I'm not going to provide health insurance anymore. You guys just go get your own individual plans. Through the exchanges, you can get a health insurance plan, and for somebody who makes $48,000 a year, a typical plan for a family of 4, with a $500 deductible, would be about $15,000 a year. It's about $1,250 a month. That's the going rate right now. The subsidy for that, for someone who makes $48,000, is $10,000. The employee, that individual, would pay about $5,000. If that's for a better benefit than what they can get through their employer right now. That's for someone who makes $48,000. If that same plan, you make $85,000 and you have a family of 4, you get a subsidy of $5,000 and you're paying $10,000. That is a silver plan. There's a bronze plan, a silver plan, a gold plan, and a platinum plan. You know, if you decide that you don't want to pay the $5,000 in this situation, and you want to make the best, you can go to a lower level plan, which would be a bronze plan, which would be similar to what most employers are offering right now. And the cost might be around $3,000 a year. So, when I'm talking to an employer, and he's thinking, okay, I'm going to dissolve my health insurance plan and have the employees get their own health insurance. There's no pre-existing conditions. There's no medical underwriting. The plans are essentially the same as what an employer plan has. It has a January 1st, 2014. The big question is, how much do you make? If you make less than $85,000 a year, you have a family of 4, you're qualifying for a subsidy. We can put it in the calculator. We can figure out about how much of a subsidy you get and how much you're going to have to pay. Now, there's always gotchas. With the exchanges, there's going to be limitations as to which doctors you can go to, what your network is like, and there's all kinds of things that can be involved. But as far as the advertised benefits and everything else, it's going to be better than what you have right now. Next page. Okay, I'm talking to all these employers, and tons of questions and discussions are taking place. The employer has 3 choices. He can provide a fully insured plan, just as ours has, deal with the increases that are going to take place, the mandates are going to take place, decide whether or not he wants to invest and pay money for his CPA account because his best friend is going to be a CPA accountant, just to keep him, to help him navigate through the waters. He might need a tax attorney, and he's going to need a strong HR department to make sure that he does everything right. But he may decide to continue with a fully insurance plan. The other thing you can do to avoid a lot of the state taxes and the federal taxes is to go to a self-funded plan and assume a lot of risk. So the third thing you can do is dissolve this health plan. There's going to be increased premiums and significant mandated fines and penalties. The fines and penalties are for those employers that have over 50 employees, and that's full-time employees. If you have less than 50 employees, you don't have a penalty for not providing your insurance for the employees, but at the same time, if you do, you're going to pay a lot more. Right now, the employee that I was talking to yesterday, he's looking at a 28% increase this year, and he's going to have about the same next year, because there's a lot of taxes being imposed in different areas that's causing the insurance premiums to go up. The other thing that's happening is right now, with a rate for, say, a $1,000 deductible for a 22-year-old male, it's $62 to $65 a month. The same plan for a 62-year-old male is $500 a month. What they're going to do, there's 8 times, you could be 8 times as high. There's an 8 times swing between the lowest rate and the highest rate. They're going to compress that to 3 times. So they're going to take all the young people, push those rates up, probably in the area of $150 a month from $62, and maybe bring the rates down for the 62-year-old from $500 to $450. So an employer that has younger employees, the average rate's going to go up over and above the 28% increase they have for next year. In addition to that, it's going to be all these extra taxes. There's a special federal tax to fund a $25 billion program that will be used as a high-risk type of subsidy for the insurance companies that will take on, like diabetics, where they not only can qualify, the insurance company can collect the premium for the diabetic, but also get a subsidy from the government. It's a big cash incentive for the insurance companies. The insurance companies are now going to be like the big banks, where they're going to be too big to fail, and they're getting huge incentives. You notice with this last election, you didn't see the insurance companies lining up to defeat Obama, because they're getting a big cash inflow. And they have the opportunity to get a lot of insureds through the mandates. So and it can be utility. They don't have to invest in underwriting and all those things that they used to do. Yeah, just one more. So the employer is going to have to measure the cost and benefits as far as releasing his employees to an individual plan or keeping them on a group plan. The employer is going to be really relieved in some ways, because every year at renewal time, the rates go up, say 28%, and it's a budget-busting decision that he has to make. If you think about it, the employer, and I've done a lot of employee meetings, where I have to stand in front of a group of hostile employees where I'm saying, okay, your deductible's going up and you're going to have to pay more of the premium out of your paychecks, and everybody's mad. The employers are tired of getting beat up, and they're just going to say, forget it. You know, you guys get your own health insurance plan. You can get the plan you want. A lot of you can get subsidies. I'm done with trying to satisfy everybody and stay in compliance with the government. Get your own individual plan. That's what's going to happen. I hear it over and over again. Very few employers are going to say, well, I'm going to continue to take on the risk, take the burden of the increases, try to stay in compliance. If I don't have a penalty, I'm just, you know, I'm just not going to do it. Self-insurance, basically that's for employers with 20 or more. They're taking on a big risk. And again, you got the risk of providing the health insurance, but you do away with the state and federal taxes, but you're taking on additional risk that you wouldn't otherwise have with a fully insured plan. Not very many employers with less than 50 employees will self-insure. Next slide. Groups with over 50 employees, there's going to be Penalty if you don't provide health insurance of $2,000 per employee. It's understood pretty much that $2,000 penalty is going to ratchet up pretty quickly over the next few years because it's not enough. They're going to need to collect more money to cover the subsidies that are going to be paid for people that are getting individual plans. So that's going to be ratcheted up pretty quickly. The thing to remember with employers that have over 50 employees is that it's only for employees that work 30 hours a week or more. So you're going to have some employers saying, okay, everybody works 29 hours a week or less, so I don't have to pay a penalty. You're going to have a lot of that. You're going to have some employers that will keep, they might have 75 employees. They have part-time people, and they have to watch it and talk to their accountant or their tax attorney, because what they do to calculate whether or not you have 50 employees is to say, okay, you got 2 people each working 15 hours a week each, that qualifies as 1 full-time employee. So you got to watch out. There's all kinds of things that you have to worry about to make sure you stay in compliance. There's also issues concerning how much premium you are going to have your employee pay towards their health insurance. You can't have them pay, as an example, more than 9.5% of their salary into health insurance, otherwise they're subject to a fine also. There's a lot of variations to that. Again, you need to talk to your CPA or tax attorney. There's all kinds of things. Again, an employer will look at it and say, why am I doing this? You know, why in the heck am I doing this? Especially when the employees can get their own health insurance and get the same benefits as I've been providing all along. I just want to make widgets, you know? Yeah. Less than 50 employees. I'm really expecting virtually everybody to release their employees to the health exchanges or get their own individual plans. Keep in mind, an employee can't take advantage of the subsidies if he's qualified to be on a group plan. The other thing that's happening, I'm seeing, is that 401k plans are being curtailed or eliminated at the prospect of having to pay for the health insurance for the employees. That's something to think about. Employers have to take a look at the total compensation they're paying for their employees. Health insurance is part of it. They're going to have these huge increases coming January 1st of 2014. Something else has to give. Either they're not going to hire somebody, or they're going to cut back on other benefits. Next slide. Here's the way I'm talking to employers right now that have less than 50 employees. Mr. Employer, this is your last renewal that you're going to have to deal with. You no longer have to deal with budget-busting rate increases. You no longer have to pick a plan that everybody's going to be satisfied with. You no longer have to take the blame when an employee has a high claim, a transplant or something like that, and maybe it's experimental, and the insurance company's doing away with it. It's in the newspaper. The employer's getting all the blame for picking the wrong plan and all that. Forget it. The employee can get the same benefits on their own. There's no pre-existing conditions. The employee's going to qualify for subsidies. The employer, if he wants, can say, okay, everybody, get your own individual plan. I'll ratchet up how much you make. In fact, if you talk to your CPA as an employer, you can probably pre-qualify that under an HRA provision so that you can reimburse the employee for their health insurance premium for their individual plan pre-tax. Next slide. What will individuals do? It's talking to a landscape, a guy that owns a landscaping company. He says, you know, my guys will qualify for a subsidy. They don't make that much money, but they're still not going to get the health insurance. The fine's only $95 a year. Why would they still want to pay $100 a month when they're not going to use the insurance? They're invincible. They're only going to pay $95, and they'll probably be deducted from their tax refund. They don't care. The penalty the second year is $325, and thereafter it's $625. Now, in the event it's a higher paid employee, that rather than being the dollar amount, it can be 1% first year, 2% third year, and 2.5% thereafter. That's a penalty. is that we had some real problems in the health insurance industry, and I'll use my partner as an example. He has a son who had a rare form of leukemia as a child, and to stay in remission, the drug that he takes is $8,400 a month. And he's just now graduated from college. He got a job with Deloitte. And the reason he's fortunate he's with Deloitte is because it's an employer that's a large employer where he can have his medicines covered. He could not go off and start his own business, his own practice, because he couldn't afford to get an individual health insurance plan with the way our system is set up. Now with healthcare reform, he could leave the employer, set up his own practice, and not have to worry about it because it's the same essential benefits that his employer provides. That's a good thing. But we didn't have to turn the system upside down to accomplish that. Next slide. I guess basically, again, the theme is it's not what your health conditions are, it's how much money you make as an individual, as to whether or not you qualify for a subsidy, or how much your employees make as to whether or not they qualify for a subsidy. If you're an employer, you're going to provide health insurance for your employees or a group plan, you've got to get a good CPA attorney or a good tax attorney. Next slide. I touched on this. Go ahead and go to the next slide. Okay, Kaiser Foundation. There's a good website. They have a nice little video thing. I didn't show it on purpose because it's a pretty liberal leaning provision. I know Al would take a shoe off and throw it at me. But they do have that engine where you can put in the salary amount and see how much somebody would qualify for. Also, you can get a lot of good information on the legislation. I guess, in summary, I didn't want to go through all the provisions and all the taxes and everything else. I guess the way I see it is it's law as of January 1st, 2014. The torpedo has hit the ship. It's sinking. My role is to meet with employers and individuals and help guide them to the lifeboats. That's what I'm doing. I know there's some courageous people that are thinking about or trying to find a way to get it back to the Supreme Court to see what they can do. There are people that are thinking, well, in Congress, maybe there's something we can do to defund some things. That's not my role right now. Basically, I'm just trying to direct everybody to lifeboats. The other thing is I see this as a step towards universal health care. You can see it where everybody's being driven towards individual plans. We've got problems with how it's going to be funded for the subsidies. I mean, you can just see it. I think the thing, the big fight that we have to make is our freedom. The freedom to be able to get health care that we feel we need that's not mandated or restricted by the government. That's the big thing. That's the big fight. You know, in Canada, they have universal health care, but also in Canada, they didn't fight for that freedom. They asked for it. In the United States, we fight for our freedom. And we'll have to fight for our freedom together. Thank you.
Thank you, Chair. Are there any questions?
I sat down. How many CPAs are in the room here by chance? The CPAs are all smiling because they've got a lot of business coming their direction.
Okay, now I'm going to ask you, and if anyone has a comment, please keep it brief. When you stand up, just introduce yourself and then ask your question or comment.
My name is Tom Ranson. I just wondered a little bit about your background. I'm sorry I haven't met you. I don't know what you do. I respect what you're saying. I think it's very informative, but just a little bit of background.
I've been in the health insurance industry for 30 years, over 30 years. I have been a wholesaler working with independent agents throughout Ohio, over 300 agents throughout Ohio. Marketing Aetna, United Healthcare, Principal Financial Group through local agents so that they could prepare the plans for their clients. The last time I was speaking, Principal Financial Group decided to exit the health insurance market, representing about $100 million of business that I was managing here in Ohio, and I watched it vaporize in 12 months. I got a little bitter. It was a lot of business, 30 years of work, and it's like I had a chance to talk to Mitt Romney, and I said, a lot of guys are hurting right now that are insurance agents. Their average age is 55 years old. And this was their retirement with their individual businesses, and now it's vaporized on them, and they've lost their retirement. And I said to Mr. Romney, I said, he says, what can I do? And I said, right now we're not waiting for the election. We're picking ourselves up. We're going to try to figure out what we're going to do, and we're going to move forward. We're not waiting for election. I said, we didn't. I had to close 3 offices, consolidate everything in Columbus. My wife and I had to move last summer down to Columbus to where my office is, where I consolidated everything. And unfortunately, I had to move out of Brecksville, where we've been for over 30 years here. But it's been quite a transition we're going through, and it's a tough discussion that I have every day. I feel like I work for hospice right now. I'm the insurance agent talking to employers. It's pretty tough. Thank you.
Mr. Draper?
Just a quick question. In the past few weeks, month, I was inundated with literature from different insurance companies. Absolutely inundated. And I finally called up General Electric, where I'm retired from, and said, what do I do? And they told me that they're going to continue through most of 2013 at least. Now, that's a major employer that is self-insured, and they use United Healthcare as their paying agent. I'm happy with it. I don't know if it's going to change. I hope it doesn't. Because right now it costs me, between that and Medicare, it costs me about $6,000 a year. So if it changes, I hope it's not for the worse. Thank you.
I'll come back to you, Mark. Let me get it first. He had the hand up long.
Many of the people in this room heard me speak to the bills that have been created since about 1986, and I became aware of it, where the government wants to nationalize 401k plans. I spoke to Portman when he was here campaigning to this group, and then in Euclid this summer I had a chance to talk to Romney himself about this point, and I have had personal conversation with a lot of people in my family and my social groups. They've all called me a whack-out, a nutcase. But I know that this has been going on, and the last one that I checked out was John Kerry was developing a bill out of the Senate last year. It hasn't come to the floor or anything, but they are working on it. This week there was something in the Wall Street Journal that one of these bills has finally gotten some flesh to it. Maybe you know about this. That the government is proposing to reduce the ability for any employee of an employer-sponsored pension, that the sum total of their deferrals, an employer's matching contribution, and/or profit-sharing contributions at the end of the year cannot exceed $20,000. Now, anybody that believes that their taxes aren't going to rise, they're crazy, because whatever you can tax shelter by deferring some of your wages into a 401k plan, reduce your reportable income. Well, if it's been cut down to 20%, then everybody's taxes are going to go up. Our party, Tea Party members, etc., we're not speaking to that. And that's where I think we lost out in this election. And my experience is 45 years in the pension administration area. So I've been watching this very carefully, but I just want everybody here to know that you better stay on top of it and start telling your friends about it. Thank you.
It's not healthcare. We're supposed to be talking about.
My name is Joe Sherry. I'm being told that companies like General Motors and McDonald's are exempt from Obamacare. Can Can you confirm that, and can you mention any other companies that might be exempt?
That's above my pay grade. I just work with little guys with less than 100 employees. I got a few that are, 400 or 500 life groups, but I've been working with somebody else might better know how that.
They have granted waivers. Patty, is that what you were going to say, or did you have a question? Okay, I'll get you that. I can tell you the Obama administration, Kathleen Sebelius, has granted hundreds of waivers. It probably is thousands at this point. And coincidentally, many of them have been to union organizations and other large contributors to the Obama campaign.
Yeah, that's the way it works.
Okay. Now, I want to try to focus on people who have questions, by the way. Out of respect for the whole audience. So if you have a question? Yes. Okay.
Now for the $6 trillion question. Since our governor is not going to institute a state exchange, and the federal government may have some time before getting healthcare exchanges set up in all the states that are not set them up, what is the contingency? How can these fines be imposed and enforced and taken when you have this time lapse where there's no opportunity for individuals or employers to have avail themselves of these healthcare plans? So, are we protected from these penalties since, the opportunity isn't there? Is this just enforced through the IRS? It's a little unclear to me exactly how they can justify penalizing people when there's no exchange which to choose a plan from.
Right.
Do you understand that?
I'm glad you brought this up. The exchanges, the open enrollment starts October 1st. And that's the reason I'm talking to employers right now about having employee meetings based on the new year here. Because the employer should be talking to the employees about, okay, we're providing a health insurance plan right now, but there's going to be an exchange effective January 1st, 2014 is going to be a federal exchange, and it will be here. It's already in the works. The mechanics are all in the works. And the federal exchange will be here in Ohio, and the open enrollment starts October 1st. The big panic during the election that the insurance companies had was that Governor Romney was going to be elected. They were in an absolute panic because they've invested so much money and so much into getting ready for the exchanges to be set up and for healthcare reform to be rolled in. Plus, there's $25 billion there that's there for the taking for the big insurance companies. I mean, I don't mean to be big in a big company, but that's really what's happening here. It's like the too big to fail thing with the banks. It's all the cake is baked. That's all there is to it. The exchanges will be here. It's going to be done. They'll screw it up. I listened to HHS regs being rolled out last week and the week before, and when it came to question and answer, all the special interests were lined up asking their questions, the stupid stuff. There was somebody that was talking about being a special interest group for victims, cancer victims for radon exposure, and wanting to know if HHS could put some provision in where all homes could be inspected for radon. The money's there and everybody's there lining up to grab it. It drives me nuts. But they're going to do it. It's going to happen. They'll screw it up in the process. But we're not going to get away with getting some reprieve on the papers. It's not going to happen.
Thank you. Jerry, Mayor Duffler had a question.
Does this law apply to Congress also? I think we need a movement in the country. I think we need a movement that says Congress shall pass laws that applies to them but not to us, and they should pass no laws that apply to us and not to them. I think it's time we start pushing through the country. I think we'd have had a whole different system.
And by the way, it's been a while since I looked at the bill, but I did read the entire bill at one time, and the answer is no, it doesn't apply to Congress, because there's language in the bill that basically says government employees can keep the blah, blah, blah programs that they have. So congressmen and senators can keep whatever. the same gold-plated plans they have now, at whatever cost they decide to charge themselves. More questions?
Hi, my name is Edith Duras, and I have a question for you, please. The people who will undoubtedly choose to pay the penalty and not buy health insurance, I mean, you'd be foolish not to if you look at the annual penalty that you would pay. What's going to happen to those people's health care costs? Who will bear the health care costs of the people who have chosen to pay the penalties instead of insurance?
Well, the rest of us will. No question about it. You know, they have taxes and fees and all that, and we're convinced it's all got to go into some big general fund. It's like there's no lockbox for this like there was for, supposedly for Social Security. It's just, they're just looking anywhere they can to collect the fees, and they're still not going to have enough money to pay the subsidies. And there will be people that will refuse to pay the penalty. And when you think about it, they can refuse to buy the health insurance, and if they have a health condition come up, they don't have to wait for an open enrollment under this plan. You can just get it right away. So there's nothing to prevent you from not buying the insurance as an individual if you think you're invincible and you just don't want to pay the premium.
Jerry, could you clarify something regarding qualifications for the subsidies or premiums? I thought you made some comment regarding that they have to qualify or something related to the organization that they were with. Can you explain that? Because that I think is important for people to understand.
Okay, for an individual to get an individual plan and qualify for a subsidy, it has to be through the federal or state exchange. Basically, they're individual plans still, but they're sanctioned. And to be able to qualify for the subsidy, you have to be in a position where you're not qualified you're not eligible to be on an employer plan. So if your employer says, well, to be on my plan you have to pay this, and the employee says, no, I won't be on your plan, I'll just get my own individual plan because I get a subsidy, he won't be able to get that subsidy because his employer is providing the plan. Only for those people that are not eligible for a health insurance plan through their employer.
Thank you.
Yes.
Can you tell me, if a person is on Medicare,
Go ahead.
hi, our name McNamara, if a person's on Medicare and they have a secondary insurance that pays the 20%, which insurance are you on? Are they going to put Medicare into the Obamacare? Is the secondary insurance have to be part of the exchange?
No. The Medicare supplements, that's all separate. This is age 64 and under that we're talking about. So we're not affecting that. Where the Medicare is affected is really in the amount of money that the government has committed to Medicare. And they're going to be shifting money towards the other population, the rest of the population that doesn't have health insurance that they're going to have to pay subsidies on. And that's the big problem that we have going on. On page 9 of this report, there's a 1% fee that is being imposed, I believe, the first of this year on everybody's premium. And it's to pay for an organization called the Comparative Effectiveness Research Committee, otherwise known as the death panel. And what they're going to do is they're going to take a look at the effectiveness of treatments and how much it costs and all those types of things. And then they don't have legislative abilities, but this fee goes to finance this organization that will make recommendations to determine where money is best spent. That's a big deal. Because right now, I'd say, from what I hear, 80% of health expenditures take place in the last 6 months of a person's life. And they're going to be looking at that and thinking, okay, that's an awful lot of money. And we could redirect some of that money in other areas where we're falling short. It's a reality of what's probably going to happen. We don't like to talk about it, but it's probably what's going to happen.
Yeah, when Sarah Palin said the death panels, and everyone poo-pooed her, that's what she was reading in the law. And the other thing, folks, to be aware of is there's another group appointed solely by the president, answerable only to the president,
report.
called I think it's the Medicare Payment Advisory Board. And the way that they will ration, another way that they'll ration besides choosing what treatments, surgeries, medicines, et cetera, meet their criteria for effectiveness is they'll decide how doctors will be paid, how hospitals will be paid, and what they will be compensated for. That's how they'll squeeze the market and they'll deny services to patients, just as they do in Europe.
My partner's son that was diagnosed with this rare cancer, only 9 children a year are diagnosed with this, and it was an experimental treatment. He would be the victim of the effectiveness of spending the money and where it's best spent and all that in this new world that we're going into. And where it's important we fight for our freedom is that he could use his own funds to pay for that, because the government may not be willing to allow the government-sponsored plans to pay for it.
I'm Mark Mazzoni. Jerry, what's your opinion and what is the kind of inside track on how this may overflow and affect just what we're talking about, the Medicare and the medical supplement, Medicare supplement, as well as the Medicare Advantage plan? My understanding was that some of this was going to somehow affect and constrain the use of Medicare Advantage plans. And what is your inside opinion that the likelihood of Medicare is going to be dissolved and folded in to the Obamacare plan, and well, we'll all be on one national plan, there won't be any Medicare to distinguish that. So all the retiring people will be pushed into this as well.
Well, I can tell you that I can't speculate too much other than to watch what the insurance companies are doing, and it's really interesting to see what they're doing. Insurance companies like Aetna and United Healthcare are buying companies that specialize in working just with Medicaid eligible people, Medicare and all that, and the goal, if you talk with or listen to someone like Bertolini, who is the head of Aetna or some of the others, they want to have a cradle-to-grave market that they're covering. And I can see where the big companies are trying to make sure that they have the ability to insure somebody from the time they're born to the time they die. And I can see it all being homogenized. I mean, I can see it coming. I don't know how soon I can see it coming.
Other questions? And anybody who hasn't asked or had a chance to speak yet first.
And I can talk to anybody else.
Richard?
Yeah, I've been in business 50 years. And when I'm going to the Medicare, the problems with the Medicare, what you're trying to do, as we know, right? They're trying to take the money out of Medicare and shove it into that rotten Obamacare. Well, that affects guys like me and my wife. As a lot of people know, my wife and I both have been involved with blood cancers and cancers of the bone and so forth. Without these drugs that we have today, my wife wouldn't be around today. 15 years ago, the bone cancer was fatal within 6 months to a year. And this is what is going to happen. They're starting to tax, like for example, if you go to, they start to ration, okay? You're going to go in, okay, I got a bad hip, it's killing me. My mother had one done at 92 years old, she died at 102. God bless her, she had terrific pain. She got the thing done, boom, under Medicare. What's going to happen, they might start saying, well, you're going to have to pay for it now. Elective surgery is not going to be allowed. So this is the kind of stuff you're in for if we don't stop this thing. Now there's good news. Liberty University is going to fight it. They've got a suit going, and it's going to go to the Supreme Court this spring. We're going to hope that they knock it out. Roberts, he is a traitor, as far as I'm concerned. He was a traitor to the Republican Party.
Sure, you guys work on that, and I'll keep directing people to like this.
Kathy Saka, I have to have an operation, and I asked the surgeon right out, will they deny me this operation? He told me to my face that it isn't that plan, they cannot deny you an operation.
No.
No, I asked him about Obamacare, because I was going to, should I have it now, or is it okay to wait?
Don't count it, because if they're going to go to rationing,
Well, this is what he told me. So, who do you believe? Who do you believe?
Yeah, they can't deny an operation, but what they can do is they can deny coverage eventually under the, using comparative effectiveness research. They'll be able to tell the insurance companies what they cover, what they don't. They'll tell doctors and hospitals how much they get compensated. So they'll force the market not to offer you that service. Well, yeah, let me see if there's anybody else with the board. Okay. Rick, can you be quick? Okay. Is there anybody else who hasn't asked a question who has a... Okay, real quick.
My dad Dick has been in the insurance industry almost 50 years, and the last I heard, we all know what happened to Sarah Palin, how she was castigated for what she dared to say was a death panel. Well, there is one. It's the Health Review Panel, and I don't know if anybody knows the name Emanuel. The last I heard, well, Rahm Emanuel left the White House to become the mayor, but if you know who Ezekiel Emanuel is, well, the last word I heard is Dr. Ezekiel Emanuel, a PhD doctor, is the one that's right now the head of the Health Review Panel. So this is the medical expertise that we have to look forward to. Thank you.
Okay, anybody who hasn't asked a question yet? We do have to move on, folks, if we want to wrap up so we get to the top. Do you have another question, Tom? Okay.
A lot of my friends are in the silver sneakers where you can go to the gym for nothing. What's going to happen with that with Obamacare? I've heard rumors, pro and con. Any word on that?
I don't know. Like I say, it's a 17,000-piece puzzle. I don't know what's going to happen to a lot of this stuff. You know, they say it's going to, the change is going to take place over a generation. You know, it's going to be slow, it's going to be continual. There'll be bumps along the way, there'll be changes. I think the only thing we need to do is to really make sure that we, again, fight for the freedom to control as much as we can in our own lives what's available to us. Thank you.
Anything else?